Welcome back, everybody, to another deep dive. This time you've given us some really interesting articles on fintech funding.
Yeah, always lots going on in fintech.
Exactly. And these articles, one gives us like a big overview of the whole fintech funding scene, and the other one really zooms in on 2023, which everyone says was kind of a crazy year.
A bit of a roller coaster.
Totally. So are you ready to figure out what makes this whole financial revolution tick?
Let's do it. I think understanding fintech funding is key to understanding where the whole sector is going.
Absolutely. So let's just start with the basics. What exactly are we talking about when we say fintech? I mean, this first article makes a good point. It's not just about like having a cool app on your phone, right?
Right. It's much bigger than that. It's really about how finance and technology are, they're coming together.
They're merging.
Yeah, they're merging to like totally change how we think about money and how we use it.
And how we manage it, everything.
Everything, yeah. Like even how we think about like what is valuable.
That's a good point.
It covers everything. Mobile, payments, robo-advisors, you've got blockchain lending.
Oh yeah, crypto.
Yep, even those decentralized finance platforms.
Decentralized finance, DeFi.
All of that, that's all part of fintech.
So it's a whole ecosystem. It's not just one thing.
Exactly.
And this kind of brings us to funding, right? Because why is funding so important for these fintech startups? They've got to have money to make it all work.
Think of it this way, like a plant without water. It just can't grow.
Right.
Especially in those early stages.
That early stage is so crucial.
Yeah, they need that funding to do research and development, build their platforms, get those users, and then scale up.
And this first article really emphasizes how competitive it is to get that funding. It's like an obstacle course for these startups.
Oh, absolutely. It's not easy at all. And, it's not just about getting any funding either. It's got to be the right funding from the right investors.
So people who really get your vision.
Exactly. People who understand the market you're in and who bring more than just money, right? They bring that expertise, their networks, mentorship. It's a real partnership.
So the article goes on to break down these different kinds of investors and funding sources.
Right. There are a few main ones.
Let's take a look at each of those, like how they actually work.
Okay, so first you have your venture capital firms. Like these are the big players, right?
They've got all the money.
They pool money from, institutions, high net worth individuals, and they're really interested in fintech because of its potential to disrupt things. They're looking for those startups that could grow really fast.
The ones with the highest growth potential.
Exactly. And remember, VCs, they're typically aiming for like 10 times their return on investment.
Oh, 10 times.
So they're not just looking for a good idea. They want to see, a chance for massive disruption and huge returns.
They want to change the world.
Pretty much, yeah. And they're not just passive investors either. They really get involved with the companies they fund.
They take an active role.
They do, yeah. Taking board seats, offering strategic advice, connecting startups with their network, helping them navigate those tricky regulations.
It's really hands-on.
It is. Now, then you have your angel investors. They sound a bit more, angelic, right?
Yeah, they do. They make me think of those like wings and halos.
Uh-huh, exactly. But who are these angel investors really, and what motivates them?
What makes them pick?
Angel investors are individuals, a lot of them are successful entrepreneurs themselves, and they invest their own money, their own capital in early stage startups.
So they're taking a bigger risk.
In a way, yeah. And they're driven by this passion for innovation, this desire to give back to the entrepreneurial world. And of course, there's the potential for big financial rewards too.
Of course, who doesn't like a good return?
Right. And they can also bring valuable experience and be great mentors to the startups they invest in.
Because they've been there, they've done that.
Exactly. So it's really interesting to see how those personal passions and financial interests kind of mix together in this world of fintech investing.
Definitely, yeah. And then there's crowdfunding, which I feel like is totally shaking up the traditional way of doing things.
It is. It really democratizes access to capital. Platforms like Kickstarter and Indiegogo, they let startups connect directly with a whole bunch of individual investors.
So they don't have to go through those traditional gatekeepers like the banks or those big venture capital firms.
Exactly. They can go right to the people.
And there are a few different models for crowdfunding, right?
There are, yeah. You've got equity-based crowdfunding where investors actually get a share of the company.
So they're part owners.
Yeah, they're owners. Then there's reward-based crowdfunding where investors get a product or service in return for their contribution.
Like if they're funding a new gadget or something, they get to be one of the first to get it.
Right, exactly. And then you even have debt-based crowdfunding, which is basically like a loan.
So there are tons of different options for both the startups and the investors.
Yeah, crowdfunding has really opened things up. It's amazing to see how technology is reshaping the whole financial landscape. And actually, the first article even mentions government support as a funding source.
Oh, interesting. I wouldn't have thought of that.
It makes sense, though. Governments all over the world are realizing the potential of fintech. I mean, it can boost their economies, create jobs, and really help promote financial inclusion. And they're not just offering grants and subsidies either.
They're getting more involved.
Yeah, they're creating supportive regulations, launching incubator programs, and even setting up these sandboxes.
Sandboxes,
Yeah.
like for kids to play in.
Uh-huh. Not quite. These sandboxes are like controlled environments where startups can test out their innovations safely.
Oh, I get it. It's like a testing ground.
Yeah, a safe space to experiment and see what works before they go out into the real world. It's fascinating to see governments getting so involved in fostering this fintech growth. But, all these different funding sources, they fueled this incredible boom in the fintech sector for years. But then 2023 came along and things changed, as that second article points out. Global fintech investment dropped 48%. That's a huge shift from the excitement of the previous years.
It was a big drop, yeah. And I have to admit, when I saw that, I was like, whoa, what's going on here? It felt like everyone kind of hit the brakes.
Yeah, I think it was a bit of a reality check after all the hype.
So how do we make sense of this? Was it just a temporary thing, or is there something bigger happening?
I'd say it was more like a reset, a natural correction after a period of, maybe overly rapid growth. It's like climbing a mountain. You need to stop, take a breather, look around before you keep going.
So not a crash, more like a necessary slowdown.
Exactly. And it forced everyone, both the startups and the investors, to get real about what actually makes a fintech company successful in the long run. That era of chasing unicorns, those billion-dollar valuations based mostly on hype and rapid user growth, it seems like that's fading.
So the article talks about this flight to quality. What does that mean exactly in the fintech world?
Investors are getting pickier. They're focusing more on the fundamentals. They're really digging into the business models. They want to see a clear path to profitability, and they're prioritizing companies that can show strong unit economics.
So instead of betting on the fastest horse, they want the one that can actually win the race.
Exactly. And you see this reflected in what those industry leaders are saying in the article. Like Nikolai Chamizo from Incor Invest, he calls it a wake-up call for fintech companies. It's not just about chasing growth, it's about building a solid, lasting business.
One that can weather the storms.
Exactly, one that has resilience. And Ivan Niku from Navigate Ventures, he talks about this flight to quality as a sign that investors are looking for substance over hype.
So they want companies that are actually solving real problems for real people.
Yeah.
Generating real revenue.
Right. And building those business models that can withstand the ups and downs of the market.
The ones that aren't just built on a fad.
Exactly. And, Yankee Wan, the CEO of Waymo, he actually sees this as a good thing. He thinks the companies that are able to secure funding now in this tougher environment are probably the strongest ones. The ones that can adapt, they're the ones that will come out of this downturn even stronger.
So it's like the downturn is a test.
It is a test of resilience. And those who pass, they've proven they can handle whatever comes their way.
That they're in it for the long haul.
Yeah, and that they can navigate uncertainty. So even though 2023 was a challenging year for fintech funding, it seems like it's also pushed the industry to become more mature, more sustainable.
To grow up a little bit.
In a way, yeah. And that brings us to the big question. What does all this mean for the future of fintech? What trends are investors excited about now? Where are the new opportunities popping up?
Well, the article mentions some pretty fascinating stuff like decentralized finance, DeFi. That sounds really complex, but also super interesting.
DeFi is definitely one of the most exciting areas in fintech. It's all about using blockchain technology, especially smart contracts, to create financial services that can run on their own without needing those traditional middlemen like banks. So think about lending, borrowing, trading, even insurance, all happening on a decentralized platform, totally transparent and accessible.
So it's cutting out the middleman, making things more efficient.
Potentially more equitable, too.
And because it's built on open source protocols, it can be super innovative and anyone can access it, especially people who haven't been well served by traditional financial systems.
Exactly. It has the potential to level the playing field. And the article also talks about this growing interest in sustainability and ethical finance.
Which makes sense. I mean, it seems like everyone's thinking about that these days.
It's a big trend, yeah. And a lot of investors, especially younger ones, are factoring in environmental, social, and governance principles, those ESG factors, into their investment decisions. They want to put their money into companies that are doing good for the world. And that's definitely having an impact on the fintech space.
So it's not just about making money anymore. It's about doing good at the same time.
It's about aligning your investments with your values.
So like impact investing, green finance, those kinds of things.
Exactly. And fintech is playing a big role in making those things happen.
And the article highlights some companies that are doing just that, proving that you can be profitable and do good at the same time.
Right. It's not an either situation anymore.
It's really inspiring to see how fintech can be used to tackle some of the world's biggest challenges. But let's be real, building a successful fintech company, securing that funding, navigating this ever-changing landscape, it's not easy. What are some of the hurdles that startups face? And what advice do the articles give to those who want to get into this space?
Well, one of the biggest challenges is just how crowded the market is. I mean, there are so many fintech startups out there, all competing for attention and funding, so it can be tough to stand out from the crowd. That's why it's so important for entrepreneurs to have a really clear and unique value proposition and to be able to explain it clearly to potential investors.
So you can't just have a good idea. You have to show why yours is special, why it deserves that funding.
Exactly. And the article also talks about the due diligence process that investors go through. It's pretty rigorous.
They really do their homework.
They do, yeah. They want to minimize their risk, so they look at everything. The team's experience, the technology, how big the market is, the company's financial projections. They're looking for any red flags that might suggest the startup isn't a good investment.
So what advice do the articles offer for aspiring fintech entrepreneurs? What are the key takeaways?
I think the biggest one is clarity. You have to be able to articulate your value proposition in a way that's concise and compelling. What problem are you solving? For whom? Why is your solution better than what's already out there? That needs to be crystal clear from the very beginning.
So they're not just looking for a cool idea. They want to see a well-defined problem and a solution that really hits the mark.
Exactly. And you can't just talk about it. You need to back it up with data. Investors want to see proof that your idea is gaining traction, whether it's user growth, early revenue, strong market validation. Data is crucial for building credibility and showing that your startup is more than just hype.
It's about showing them the numbers, proving that there's real potential. What else should entrepreneurs keep in mind when they're trying to secure funding?
Transparency is really important, and open communication throughout the whole process. You have to build trust with investors, and that means being honest about the challenges and the risks, not just the potential rewards. Investors are more likely to partner with entrepreneurs who are upfront and straightforward.
It sounds like it's as much about the relationship as it is about the business plan.
Definitely. Investors want to work with people they can trust and believe in. So despite all the challenges, it seems like there's still a lot of opportunity in fintech for those who are willing to put in the work.
For those who are passionate and dedicated.
Fintech is such a dynamic and rapidly growing industry, and it has enormous potential to change the way we manage our money and interact with the global economy. And even though funding slowed down in 2023, it hasn't disappeared. Investors are still actively looking for innovative companies with solid foundations and a vision for the future.
And the articles even offer some optimistic predictions about where fintech is headed. What are some of those?
Well, they say we're likely to see continued growth in fintech investment as the industry matures and consolidates. Emerging markets like Latin America and Southeast Asia are also poised for significant growth, offering lots of exciting opportunities for both entrepreneurs and investors. And then there's a whole potential of central bank digital currencies, CBDCs.
Oh yeah, CBDCs, that's a whole other deep dive we need to do.
Definitely. But it seems pretty clear that fintech is going to keep playing a major role in shaping the future of finance.
No doubt about it. It's not just about making things faster, more efficient. It's about democratizing access to financial services, promoting financial inclusion, and giving individuals and businesses the tools they need to succeed in this increasingly interconnected world.
Exactly.
So as we wrap up this deep dive, it's clear that fintech funding is about so much more than just numbers. It's about fueling innovation, supporting entrepreneurs, and ultimately creating a financial system that's more inclusive and equitable for everyone.
We've seen how that 2023 downturn led to a necessary reset, pushing the industry towards a more sustainable path. We've explored all those different funding sources, from venture capital to crowdfunding, and we've gotten a glimpse of those exciting trends that are shaping the future of fintech, from DeFi to ethical investing.
It's been a really insightful journey through a truly dynamic and transformative industry. We hope this deep dive has given you a better understanding of how fintech gets funded, the challenges and opportunities that lie ahead, and the incredible potential of this space to create a better financial future for everyone.
And as you continue exploring the world of fintech, keep asking those big questions. How can we use this technology for good? What problems can it solve? How can we make sure everyone benefits from its power to change things? The answers to those questions will shape the future of finance and ultimately the world we live in.
That's a great point. Thanks for joining us on this deep dive, everyone. Until next time, keep learning, keep exploring, and keep pushing the boundaries of what's possible.